Good morning, everybody, and welcome to the latest in this IMAP webinar series. This is the second of a two-part webinar series on technology drivers for a new advice world. On Monday, we looked at the issues around advice technology and the way in which advice technology is developed and developing to support advice. Today, we're going to look at the other end of the advisor to client relationship. We're going to look at reporting and portfolio management reporting and the way in which that makes tangible the advice service offer. It's one of the key elements in my mind about being able to give meaning and purpose and to build understanding in clients about the service they're actually receiving from their advisor. I'm delighted today to be joined by Martin Morris from Praemium, and as a late substitute, Mark Smith from Elston Asset Management, who we're very grateful to for being able to step in at short notice. Elston was the winner of our Innovation Award 2 years ago, precisely in this area, the use of technology to give understanding and meaning to portfolio management decisions. And again, the session is moderated by Mike Pope, who's General Manager of La Vista Licensee Solutions, part of Centrepoint. Before I hand over to Mike, let me just say a little about a couple of things that we've got coming up. Recession is a word which suddenly we're hearing a lot more about, the will she, won't she discussion. And it seemed to me that it would be a good thing for us at short notice to offer a webinar next Monday, on the potential for a looming recession. And more importantly, the ways in which advisors and portfolio managers might deal with the uncertainty of whether we are in fact heading for a recession in Australia, whether the recession in the US is likely to affect us. And so we'll be lucky to be joined by Craig Vardy, who's head of fixed interest from BlackRock, and an economist from AMP Capital, moderated by David Matesic, who is portfolio manager with Atrium and brings real expertise in the portfolio management area to this discussion of the implications of a potential recession in Australia and globally. And then in September and October, the first of our independent thought conferences. This is an opportunity for us to showcase the work that portfolio managers do, and to showcase their thinking in Sydney about particular asset classes and in Melbourne about particular themes. So I'd encourage you to join in what I think will be a really interesting set of discussions and presentations about the way in which 30 of Australia's leading portfolio managers are tackling the issues that we currently face. So without further ado, let me hand over to Mike, our moderator. Thanks very much.
Thank you, Toby. Welcome, everybody, and welcome, Mark and Martin. Another interesting session we've got today, the technology drivers. I mean, we've been hearing about this for years. It is improving. It's got a lot better than it used to be, but certainly empowering advisors to have efficient tools and good digital solutions, because at the end of the day, we do all the grunt work behind the scenes and get the numbers right, but what the client sees is very, very important. So it's empowering that whole experience with advisors to make sure they get the right outcome for their clients, and that's quite good to have in this day and age of moving to a more digital solution. So Martin, we might have you off first, but welcome, Martin. Martin's the Chief Distribution Officer at Praemium. Mark has had 26 years experience in the industry across Australia and the UK. You'll tell by his accent in a minute. Martin has an MBA and is a graduate in his Institute of Company Directors and also accredited behavioural sales coach. So Martin's role at Praemium is certainly to grow the business and responsible for the distribution team, which is a great platform. So Martin, over to you. Let's hear about your story.
Thank you, Mike. And interestingly, I wish it was only 26 years because that would make me that little bit younger. But April 1990, I joined the industry. So we're in a fair way in. Been a long journey. First half of it in the UK and the other half here. Just get my presentation on the screen for you. So thanks to IMAP for having us here today and Mike's intro, and also to the audience for listening. My part of the presentation is not to go really deeply into client reporting. I think if you look at how you use client reporting in a client engagement sense, is very specific per business, but is also a half a day or a day's workshop really for a business to understand how it can get the best use out of its technology platform or stack in order to engage clients. But what I wanted to do with this first presentation was really just set the scene to allow from a platform perspective and allow Mark to enhance on that from a portfolio management perspective, but more so to engage the discussion and the thought process of what can we do with client reporting, with the technology that's at our fingertips now, and in helping us enhance the client engagement, which is obviously the most important thing we want. We do want business efficiencies, and tech stacks are all about that. But actually, if that doesn't drive client engagement, we're missing a very key part of the stakeholder management process. So the first thing we've got to really do, though, when we think about reporting, is get ourselves in the right mindset. And we've got to actually really be comfortable that we understand the client expectation and the requirements of the client. Again, we can look at our business, we can look at our approach, we can look at our technology, and we can deliver what we want to deliver, what we think as a business owner. But actually, we've got to put ourselves in our client's shoes. What do they expect? When I was at a licensee, we did some surveys, and one of our advisors got a really good survey result about their level of communication to client. But when we got feedback around qualitative feedback, where their clients could key in information about and give us some feedback, was that the information they received, whilst it was timely and regular and they felt that they were being communicated to, was that the type of information they were getting was very complicated. They didn't always understand it and would like a simpler way for it to be consumed. So it was an interesting thing. It allowed that advisor to put it more into client speak and use her technology more effectively. But when you look at client expectation, one of the things that I think some of the research we've done with business health is that, and also investment trends, is that 55% of people feel the advice they receive is too generic. That doesn't mean that every single portfolio needs to be bespoke. But what it means is the client needs to feel that that portfolio connects with their needs. And the digital evolution that we are engaging at the moment is, and this liquid expectation, which is the latest buzzword, is how do we bring scalable business solutions like managed accounts, and in the olden, traditionally fund of funds or multi-manager portfolios, they were still delivering client outcomes. But the problem is, how do you bring them to life so that they don't feel generic, that the client feels that it's their portfolio? And it's one of the distinct advantages of a managed account, is the ability to dissect this generic statement and look deep into the portfolio. And you need a hyper-personalized experience. And again, that's a lot of that experience is not necessarily that you're doing different things for different people, but that individual that you're communicating with feels you are communicating one-on-one, that it's specific to them. And that is an experience that can be delivered via technology. You've also got this scenario where 40% of customers prefer self-service. That doesn't mean they want to do the advice. That means that they want to be able to self-serve certain parts of the advice process or access to information. And those that have listened to Praemium presentations previously would have heard these stats where 50% of clients believe their advisor should offer a digital solution. And that more and more of them, and particularly that emerging high net worth sector, want less information held on multiple platforms. They want or multiple sources. They are looking for a single digital experience. So what we've got to think about when we think about client reporting is not just how do we deliver portfolio information, but actually how do we deliver information that covers some of these psychological needs of clients and access needs. So you'll have, a client who needs prefers self-service. What they're really looking for is access to standard information. And then as a client engagement environment, you can use technology for those clients to deliver the more bespoke or even the more technical aspects of what you do to them with them through your technology piece. And the first place that everybody is looking at the moment is the investor portal. There's a lot of work with a lot of platforms, and particularly the challenger platforms like Praemium, is that we drive a lot of focus through how do we create dynamic online investor portal experiences that our advisors' clients can self-serve. They can have as little or as much information as they need, and the advisor and our clients also have the ability to turn off certain aspects of the reporting environment should they not want their clients to see it. But it's all about that digital engagement. And it's thinking about not just, is there an investor portal, but actually what exactly does that investor portal deliver to my clients? How do I use that investor portal to enhance my brand with my client and also communicate via things like having reports delivered directly to an investor portal? So your more detailed reports that you generate in your back office can be delivered directly into the environment where they self-serve. You're creating a client engagement model where there is one source of truth. And that source of truth is where they get their at the fingertips information, and also the ability to track documents, reports, fee consent requests that you're sending to them in one place. But the starting point from reporting is, what's the base information that an investor portal can give to my clients to allow them to have access to transparent information, but also be able to self-serve to a certain point. And I think that just having an investor portal is not enough. You've got to think about your value proposition. You've got to think about what information you need to be delivering them on a day-to-day basis. And then how do you enhance that with your reporting to bring their portfolio to life and link it to their goals and strategy, which is what I want to sort of talk through now, is particularly in a managed account basis, how do you enhance the reporting or using enhanced reporting to build your client engagement strategy? How do you bring a outsourced managed account solution with a professional asset manager that is achieving everything that you requested of it? How do you bring it to life so that your clients can understand it in their own terms and not just at a portfolio level? One of the research pieces that we did with Investment Trends stated that 48% of advisors that don't use managed accounts believe that their biggest barrier by a significant margin is their ability to demonstrate their value proposition. And that is solely in my belief that the reason behind that is that they have used the portfolio as their value proposition instead of the advice proposition. We're outsourcing to managed accounts, and now they're saying, but my fees and my advice has always been wrapped around the portfolio. It is still wrapped around the portfolio as long as the portfolio is linked to client goals and aspirations and true outcomes. The fact it's managed by somebody else is not part of the equation, because what we're going to do is show you, for example, how technology has moved on to allow you to bring that to life, so that it doesn't really matter who's managing the portfolio as long as it's tracking the goals of the client. So if you think about what's happening now is technology has become more sophisticated, and you can do things like what we've created, and there's lots of technology can do this, but what we've created are reporting templates that allow you to define an asset allocation for a client, but not just I want to report on a fixed target asset allocation, but also things like I want to say, right, not just where my client's portfolio is now, but what is the target allocation that I'm aiming for? And then another step forward would be, how do I then create a target allocation range that I can track? And that is this scenario at the moment is where you're building individual portfolios. What you're now seeing as well is technology, and you should be challenging your technology providers to provide more and more relative benchmarks. The standard old traditional platform used to have 2 or 3 benchmarks that you could use to track the performance of a portfolio. So here's your real return, and here's an ASX 200 or 300 approach. What you can see on the right-hand side of the screen here is the ability then to say, actually, for my domestic shares, I'm going to choose this index. This is what I think is the most appropriate for this asset allocation. Same for international shares and domestic equity. Now, bear with me. I will show you from a managed account perspective. But if you think about what we're doing here as well, is you could build this portfolio on your own, but if you've outsourced to a managed account provider, you have access to this information. You know how much is in domestic shares. You know how much is in international shares. You can work with the asset manager to understand what benchmarks they use to track those individual components of their diversified portfolio, or the portfolios you've built inside your business. And the ability to then create composite benchmarks, which are a true reflection of what you're tracking the portfolio to. So you've got a fixed target asset allocation, and then you've got a benchmark. So building your own, talking to your portfolio manager, understanding what benchmarks they use will allow you to give some really significant real-time reporting to your clients that matches the portfolio and brings it to life. And that composite approach is where I think technology needs to go, and how we need to make sure we're getting relative benchmarking returns. What you're then able to do, it's not just a Praemium story, but just generally is, it's quite often easy to say, here's my current asset allocation, here's my target asset allocation. This is the sort of what people have been expecting from us. And then looking at things like, well, how does that match the range targets? And that's really where, those that have been running portfolios with Praemium, that run their own portfolios rather than using managed accounts, use this technology and this reporting suite to be able to not only do their reviews, but bring to life to the client where their portfolio really is at. Where is the contribution to their, and we've got other reports that also show which assets are bringing in the most contribution to the portfolio. But if we're tracking outcomes, it's using the technology, thinking about it, how do you bring it to life? Whichever technology stack you have, is think about it from a client perspective. How do I bring this story to that's going to link to my client outcomes? And if you look at, I'll just take you through a series of examples of building the story, and then we can move over to Mark. But this is a standard time-weighted return line. This standard reporting, put in a time period for the current portfolio, getting a time-weighted return outcome before expenses. Fairly simple in what it's trying to achieve. And most technologies can provide that. What we've done here is then we've then added an additional benchmark, S&P ASX 200, could be 300, doesn't matter what it is. Don't worry too much about the data points. This is really just trying to show you the story. So traditional reporting was around how do I use a benchmark against a growth outcome. But the problem, as I said, was this portfolio, as I showed you previously, is made up of different asset classes. And then how can you use the ASX 200 as a relative benchmark? So it's not really achieving what you want it to achieve. What we've done here with this, and hopefully you can see it, is that the dark line is the real return over the time period. The darker line is the ASX 200. But as you can see, if you use the ASX 200 as opposed to the growth composite, which is the lighter pink line, is you're seeing a much more specific benchmark return compared to the portfolio. And again, this is building a story. This is actually showing that using true composite benchmarking is going to give you a much different benchmark to using just standard ASX 200s or whatever it is that we're using. So we're enabled to tell our clients and show our clients that we're doing really, really sophisticated benchmarking. What you could also do is looking at the cumulative return again with a absolute return. So what we've done in this is talked about, well, what are your goals? The portfolio is going to perform at whatever it's performing at, but how is that portfolio over a given time period reporting on client goals? And again, it's finding ways to get your technology to build this story. Now, in an ideal world, you would hope this is flipped. I mean, this is obviously in the last 12 months, so or since January 2022. So we're in a downward spiral, but we can see that a 5% return is not, the actual return is not achieving our benchmark. But actually what we would hope in a growth market is that, firstly, in this instance, we can see how far away we are from our targeted outcomes. We can make a longer, use this type, if you think about a longer time period, those clients that are uncomfortable, actually just because we've got short-term volatility, if we use this charting, it's actually a great way of showing the client, well, your total absolute return required was 5% to achieve your goals. Yes, we've had some short-term blips, but actually over a 5-year period, the portfolio is still achieving your target absolute return, even though we've had short-term volatility. So it's an example in a short time frame that does the reverse, but think about how this type of reporting, not just Praemiums, any type of reporting, is think about how we're building the story, not just at a portfolio level, but being able to match goals. And then finally, this is what that is designed to show, is what is the dark line is the actual portfolio. The darker line is the growth composite compared to, again, their targeted absolute return. So the ideal reporting outcome is to say, here's what your portfolio has done. It's outperformed its composite benchmark, which is great. It's doing what it needs to do, but actually we're not tracking to the growth composite or the target absolute return. Or in reality, yes, we are, because if we think of a longer time frame, how do we use reporting to build a story to put our clients' concerns at bay, but also consistently producing a story that takes the portfolio outcomes as one aspect, but very importantly overlays the target return to achieve strategic goals for the client. And if we then turn in the story, what I would argue is that it puts stronger focus on the target absolute return away from who's managing the money. So we're building a story, we're managing your CVP to outcomes of goals rather than portfolio outcomes. And you're able to track on an individual or on a group basis what your portfolios are doing. And that's just a sort of intro into reporting and some of the methodology that we talk to clients about how to use whatever tech stack they've got.
Okay, awesome. Thank you very much. Got my camera back on. There we go. Technology. Look, before we go, Martin, I had a couple of questions. We might answer these as we go through. just to do with on a couple of slides. One was on slide 11. A question came through with the reading the black diamonds and the red triangles. Are they mediums for the benchmarks or average for this portfolio? That was on slide 11. I'm sure if you can dig that slide back out.
Yeah, so they're showing the target range, and then they're showing the composite benchmark versus the absolute return.
Right.
So the actual return. So the dark dots were the return. The lighter line was the composite benchmarks, and then the target return is the range in which the advisor sets for an individual portfolio. Okay. That slide is more where someone's doing their own portfolio management because they're setting the target ranges.
Yep.
But again, you can, working with your asset manager, you can show them this technology and engage them in your client engagement. Say, we've got access to this technology. What would the benchmarks be if I'm putting clients in your growth model? Mm-hmm. What are your range targets? What are your mandates? What do you work between? What composites do you use? And then what's the absolute return? And you can use the portfolio at an individual level, but also for you to know, is the manager tracking to their mandate and what they agreed they would be achieving on behalf of my clients?
Rightio, also awesome. Well, while I've got you right there, on slide 16, this person, Mr. Anonymous, very, very particular about his questions, would like to possibly see a 5-year performance of the portfolio. They only see year to date. I mean, I presume you can make that 5 years.
Oh yeah, yeah, absolutely. I mean, these are fixed. These are fixed reports, but yeah, absolutely. I mean, you put your time, and if you put a 5-year, I mean, this is our portfolio. We just made it up, so it's not actively managed. That's one thing. Yeah. So these returns are just where we've used an example portfolio, put some stocks in, no real asset management guru experience attached to it. So
a real demo, come and speak to you, I presume.
Yeah, talk to me. One of the BDMs come and talk about how to use the portfolio. But if you put it over a 5-year period, if this was a professional asset manager's portfolio, you would hope that the black line consistently or often enough is above the composite benchmark over the longer period. Yep. But I'm not putting any weight on the actual stocks that we used to create the actual portfolio here, because it's just, they've just thrown together.
Awesome. Well, thank you, Martin. Hang around. We might, we'll come back at the end and we'll have a bit of a Q&A if you like, but thank you very much. Well done. We'll jump to Mark now. So Mark, I'll make your bio very short and sweet. 14 years Macquarie, 6 years Elston, but you've worked in the UK as well. So, lots of experience in the wealth industry. So let's see what we have here. So over to you, Mark.
Thanks very much, Mike. And just echo comments from Martin. Thanks everybody for dialing in today, and also Toby for the opportunity to present. I might just skip through the disclaimers if I could, Toby. Next slide. Yeah, and look, today I just thought I'd sort of follow what Martin was talking earlier and bringing it back to client engagement. If you think about sort of managed accounts, we often here at Elston, we do use the analogy of the mobile phone. So managed accounts, as we know, are a better way to invest, whether it's through the investment execution, but more importantly, also reporting. And it's not to say the old way is wrong. And if you think about a Nokia versus an iPhone, a Nokia 3310 still does everything, can send text messages and make phone calls, but clients have a higher expectation now in terms of what they require. So if you think about an iPhone, what it can provide clients, it's no different with managed accounts. There's just a huge opportunity for advisors to take advantage of the new structure and really add to their own sort of value proposition. So it's a real opportunity to, we think, build deeper relationships with clients, and also demonstrate that the portfolio is being proactively managed. And I remember some research that came out of Macquarie a few years ago where they actually rated, I think it was about 1,000 clients of advised clients, and asked them, what was the number one sort of attribute that you put down to getting value from your advisor. And it was actually quite surprising. It came back to my advisor proactively manages my affairs. So, and the fact is, every advisor is doing this around the country, but clients often don't see it. And managed accounts provide a really good opportunity to demonstrate that in real time. And also touching again on what Martin sort of mentioned at the start of his presentation, it's the ability of really understanding the client needs. So we talk about CX and client experience. It's the ability of managed accounts. I think one of the great features is you can tailor communications specifically to individual client needs. And I'll touch on that a little bit later. Just next slide, please, Toby. So firstly is if we think about sort of the client experience, the ability to have the multiple touch points with clients throughout the year. As an example, I think we produced about 25 pieces of investment communications for advisors to use with clients last year. Not to say you need to use all 25, but it's the opportunity to really engage with clients throughout the year. So, and the feedback we're getting from our partners across the country is it's really freeing up that annual review time to actually concentrate on issues that the client wants to talk about and is focused on, and bring it back to their goals and needs there, as opposed to spending it on more compliance or pure investment focused discussions. Because if it's done right, clients can be informed throughout the year through an effective managed accounts communications program as to what's happening in their portfolio. Just next point there, Toby. And I think we all know about the transparency aspect of managed accounts. And, you know, one of the real key points is clients can actually see where their capital's invested. And that's really important, particularly at times of volatility. You know, we get a lot of feedback from investors around the country that, you know, they have comfort of knowing, you know, the businesses that they're invested in, or the fund managers that managing their capital. So just being able to have that look through, as opposed to say a single line in a diversified multi-manager fund. But it's also the ability then to use that communications to reinforce the investment philosophy. So if clients are seeing, and one of the great things of the transparency is clients can see everything playing out in the managed account as it happens. But we often refer to that as a double-edged sword, because as great as it is, it can create sort of nervousness and you know, challenging investor behavior. But it's a real opportunity if it's done right to reinforce why those investment decisions were made, and also reinforce and bring it back to the investment philosophy, which really sort of, if you're consistent about it, will build trust with the end client. Next point, please, Toby. And finally, just the efficiency piece. So it's the ability, we talk about mass customization, but to build scale within your practice without sort of really sacrificing that quality. So if you think about growing, and if you do have an effective managed accounts communications program in place, you can grow your business and bring on more clients without having to add more to your back office. And a lot of that is investing or leveraging the content from, whether it's your investment partner, but also the platform providers, as Martin showed us in some of those earlier slides. So it's just really looking at that piece as, you know, being able to build efficiency within your practice, but still giving clients a tailored and a quality sort of outcome and experience. Next slide, thanks. So some of the areas we sort of help advisors with, and I'll touch on probably one key point, is with the transparency, advisors are often at the coalface defending the decisions of the investment managers, and clients are seeing those investment decisions play out in real time. So the old sort of, if we go back to the Nokia sort of analogy, the old sort of school approach of providing an update at the end of the month or quarter from an investment manager isn't sufficient if a client's seeing it playing out real time. And effectively calling the advisor to question what's happened in the portfolio. So we sort of recognized this many years ago and adopted a real-time portfolio update approach. So if there is a change in the managed account, within 48 hours, we'll provide a SMS and an email to an advisor with a short 3-minute video, just explaining the decision and the rationale behind the investment decision. They can share that with clients. Again, going back to tailoring the communications, we find a lot of our partners will segment their client base as to their needs, as to whether they want that high level of detail or whether they're happy for more sort of regular, whether it's quarterly or 6-monthly reporting. We've also developed some online resources to really help advisors handle the investment communications piece. And this isn't just advisors, it's also support staff within those practices. So whether a client calls in to question something within the portfolio, we have fund snapshots, which they can click on the icons, bring up the talking points, and they even have a more detailed snapshot to send to the clients in a follow-up email. So a lot of content there, just again, to really make it easy for advisors to communicate to clients why those investments are in the portfolio. And we've also partnered with FE to produce some digital content as well. So whether it's performance charting or just look-throughs of the models, we've also brought that into our world. But lately, probably the last sort of 12 to 18 months, we've been sort of working on, again, thinking about what clients need and what advisors need is more the educational content and providing advisors with the ability to reach out to their investors, whether it's talking about volatility or the importance of rebalancing or strategic asset allocation, short 3-minute videos that they can share. And again, more touch points. So, when the client is coming towards signing their fee consent form, they're looking back and seeing the advisor actually reached out to them 6 or 7 times that year and provided some real value to them. Thanks, Toby. So I'll just, before you hand over there, Toby, I think, with managed accounts, it's really thinking about how do you want to communicate to clients. There's a lot of resources, whether it's through specialist managed account partners like Elston or professional platforms like Praemium. There's a lot of resources at your disposal, but if you do step back and think about, how am I going to communicate to my clients? Am I going to segment them? What technology do I have available and what resources? I think you can build a really successful program which will, further engage clients and build that trust and deepen your relationships. Thanks, Mike.
Okay, thank you, Mark. Well done. I might go back to the chatbot quickly. We had another question, mainly for to do with communications, passing on information to the client. Do they need to switch on something to get the flow from Elston, or is it Elston automatically send information to the client? I presume the advisor must give permission to be able to do that.
Yeah, it's a really good question. We don't have any visibility of the end client in the SMA model. So, and that's just the feature of the way they are structured on platform. So all of our communications are a partnership with advisors. We take a partnership approach and provide them with all the resources to share as they need it. Because I'll give you an example, Mike. I mentioned we sort of produced about 25 pieces of content last year. If my advisor sent me 25 pieces of communication, I'd probably tell him to pull in the reins a little bit. I don't need that level of detail, but other clients do. We sort of joke about engineers and teachers loving that high level. So it's really sort of thinking about sort of, what's that frequency. But we, if anyone is interested, we do have a secure advisor resources center that we provide them with a password so you can reach out. We can set you up.
Okay. A question also, with COVID, how did you manage the volatility from that perspective? The last period?
Yep, it's a really good question, and it's very fresh still on everyone's minds given what's happening at the moment. But that was a good example of where I think managed accounts really stepped up, and a lot of the feedback we're getting from our sort of advisors around the country is that they really started seeing the benefits of the managed account structure there, and not just from the investment piece, the ability to move quickly and not have to do ROAs to rebalance, but more so around the communications. And I look even at our sort of approach. We just during that sort of those 3 weeks in March, we moved towards weekly communications to all of our advisors, just giving updates and that assurity. And we have a long-term approach to investing here at Elston, but that's very hard when there's a 35% drop in the market. Everyone talks long-term, but it's very hard to sort of challenge those investor and personal behaviours. So really just a lot of education and yeah, just really supporting advisors, whether it's ad hoc webinars. We got the portfolio managers to jump on and talk to our advisors and clients, and just provide content for advisors to really share with their own sort of investors.
Okay, awesome. Well, Martin, while I've got you there, from Praemium's perspective, Praemium is fairly active in the market. They were kind of leaders in that very, very open architecture business a number of years ago. Are there any themes that have changed or in the last few years, and looking to the future, what do you see advisors looking for? Is there anything you see coming down the line that's going to change the way this is going? This is also ongoing and evolving, but are you seeing any particular themes from your perspective?
The main themes around the reporting and tech is just digital engagement. They've got an audience that this liquid expectation that they can deal digitally over a number of aspects. Fee consent was a great example that nearly closed the industry down in the last quarter. The platforms like Praemium that fully digitalize fees consent through a single portal. It's not just doing digital experience, but it's actually, can I get my reporting, my access to information, and my enhanced tools from an advisor in one place? And that's the problem with tech stacks, is that you can actually have it. You may have a solution for everything, but is there a single port of entry to get access to things? So, for example, what Mark was talking there about all that support that they provide. One of the great things about your technology should be that you should be able to drag all that information in. You should be able to, for example, from your platform, get platform information and then merge information in from groups like Elston with their portfolio level information and deliver it to the client at a touch of a button. Client gets a notification saying your up-to-date report's there. The portfolio looks very bespoke. They get really good information from their asset manager. And I think that's what we're seeing. I think the cleverer, that's not the right word, the more focused platform planners are actually working with their asset consultants and saying, don't just give me information I can send to my client. Let's make it very specific. Let's make this client engagement model work. And with best interest duty, it's very clear that managed accounts, and in times like volatility, remove the largest portfolio getting access first or A to Z, trying to work through your client base to make change. So there is the back end functionality that can allow rebalancing to happen very quickly, but equally every single client can get a communication at the touch of a button quickly. Then nobody is favored over another. And I think that's what we're seeing with advisors. And from a portfolio point of view, you are seeing more and more sophistication. If managed accounts and as managed accounts become more sophisticated, you need better reporting to bring that to life. One of our most recent reports that we did was attribution analysis report that shows which part of the portfolios are performing over other parts of the portfolio. But again, that's not for every client. You need to have a good suite of solutions dependent on your client segmentation. Doesn't matter how sophisticated the client is, but you might have a client that is really happy to outsource and just needs very touch of the button, simple information, simple reports delivered. You might have somebody else less sophisticated, but wants to be much more active in their portfolio. And what you need is a solution that can give you a breadth of reporting solutions and not just one experience that should fit everybody. But equally, you've got to do it in a scalable manner. And that's where a lot of the difficulty arises, that you need multiple tech solutions. If your platform does not provide a sophisticated reporting, you have to go somewhere else to do that for sophisticated clients, and vice versa.
And Mark, same with you? Are you finding the same feedback?
Yeah, absolutely. And it's not a bad segue, actually. I know, Toby, we're talking around, how mobile sort of, or technology really starts sort of evolving this space. We sort of see that really as critical, given sort of, and I even look at my own experience. I don't really use my laptop. Everything's done on my phone. So we've been trialing and testing mobile technology, whether it's through the SMS service and the videos, but even thinking about sort of how we, tailor it to clients' needs. So initially we used to put out 5-7-minute videos and found out people stopped watching after 2 minutes. So just really thinking about how do people consume content, shortening it, and really listening to clients. And I think that's where it's going to move to. And yeah, definitely. I'll just quickly touch to, there was that question that came through from anonymous user who's already using Elston. Feel free to reach out to me directly. I'm happy to sort of organise that registration.
The other question that crops up from what I see, as well as you've got the other end of the game, the actual software provider being Xplan, VitalLogic, the actual advice document preparation, the maintenance of that, the file noting, the best interest, the dealer groups saying you must have certain protocols and governance around that. How do your systems fit into the back of that? Do they work well with all the other systems out there? Martin, over to you, if you like.
Yeah, APIs are great when they work, but we interface in various ways where we send documents in bulk to groups. We send data to various groups. I think the industry is working more and more to get standardized API approaches, because that's the difficulty as well with data. Data can move anywhere. Blockchain is blockchain, right? It can work. Blockchain works because of API. So, but what you need to have is a single way in which the data is consumed and the information is consumed. So I don't think there's a perfect world there yet where a platform can do all its document generation and send the API and the data and the documents and everything seamlessly to every solution. But I think the industry is trying to get some standardization around that to make it easier. But we understand it, but we've got some groups that actually run their own interface, and Praemium does not need to be a competitor to them. You know, we should be working and be able to say, here's our solution, here's our reports, or alternately, how do we get the information that we require or you require into your system so you can interact with clients. But it's not a perfect world yet, to be true.
And I still hear the question about digital, consent forms, a lot of platforms, it's just not standardized yet. And the wet signature has to come out somewhere, unfortunately, in the game, and that still drives advisors mad. So those little things to work on.
But we think with the feedback we got with our digital consent was very, very positive, because yes, each platform needs to or has its own process. We're trying to consolidate how we help our licensees, and we've done some really good work there. But also, if you've got to fill in a form and send it to 3 different places, how long does that take compared to them coming to Praemium? And okay, it is a single system, but it's all digitalized. So they go in, they create their fee consent, upload their FDS, send it to the client. I agreed my fee consent with my client in about 30 seconds. And my advisor did not take a long time to set that fee consent request up. So yes, it's in a separate system. Perfect world is it's all consolidated, and I'm absolutely totally understand that. But actually, how do you turn the friction off? And that is by digitalizing it. And I think that was the problem. There was just too much manual workaround that was required at a practice level. But we did try to alleviate as much of that. It wasn't perfect, because some advisors were struggling with the digitalized approach. And my argument was, you want to standardize, but actually your standardization is creating more time and work than just using our digital approach. But it was first year round, people were very tender, which I totally understand, because people should have been spending time with clients and writing new business. So we just had to absorb some of that pressure and try and work with them.
And Mark, yourself, you're hearing much of that feedback, your rounds?
Yeah, I think so. In terms of, it's probably, I'd agree with what Martin said. And I think too, we're sort of focusing now, like we're getting a lot of feedback, and I saw questions come through again around branding as well. I might just sort of touch on that, just given we're close to time here. Branding is a really interesting one, because we do get a lot of, we do private label and white label solutions where branding is really important for advisors, but we're actually finding a lot now recognizing there is benefit to having the arm's length relationship in terms of working with, whether it's an Elston or another managed account specialist. And how it's positioned, we've actually worked with one group who've used videos to actually introduce the managed account partner in terms of to their clients. So really setting that up front as to this is what managed accounts are. We've gone down this path, and you'll be hearing more from our partner effectively over the coming months. So, and that has sort of negated a lot of the need to actually brand every piece of communication going, because clients understand the relationship between the managed account manager and that advice practice. So it's just a different way of, sort of looking at it. But absolutely, branding is definitely something we do look at for businesses, and particularly if that's really critical for them.
Okay. Well, in the interest of time, I might bring Toby back on to close off. And thank you, gentlemen, Mark and Martin. Well done. Great breadth of experience there, and look, some fantastic initiatives from both of you guys. So well done. Thank you very much.
Thank you.
Thank you.
Look, yeah, to Mark and Martin and Mike, thank you very much for your insights. It is an interest, it's a really interesting and critical part of the advisor to client relationship. That last point about branding is, I'd echo Mark's points about the opportunities that it creates for an advice business to make it clear to clients what it is they do and what they don't do. I know one of the advice businesses we work with has an asset consultant, and they are completely open with their clients that the asset consultant is, works with them. It's a well-known brand, and they, if you like, use it to enhance their own advice service offer. We're proud to work with so-and-so, and they're involved in all of their client webinars and client engagement. I know this because IMAP's a little involved with that advice practice in facilitating their client engagement. So look, thank you very much to the three of you for your time today. Just to re-emphasize the upcoming events for us, the recession webinar. This is a critical issue, and one which clients see on the news every day, in the newspaper every day. And they'll be asking themselves, what will this mean for me? Not just what will it mean for me in my job, what will inflation mean for me, but what would a recession mean? What will it mean if a recession's accompanied by the sort of 20 to 30% house price falls that we might expect to see? So I'd encourage you to dial in for that next Monday. Craig Vardy, head of fixed interest from BlackRock, and Diana Messina, an economist from AMP Capital, also participating in our most recent podcast, and moderated by David Matisic from Atrium, who, as I'm sure all of you know, are a portfolio manager closely associated with an advice business. So David will bring that perspective of building managed account portfolios for an advice context. And then in September and October, Independent Thought, our chance to showcase the work and the thinking of 15 in Sydney and 15 in Melbourne, of Australia's leading portfolio managers, particularly the consultants and the licensee-based portfolio managers, and the way they're approaching portfolio construction, hosted by a number of our fund management partners. So thank you very much for your time today. We'll look forward to you joining us next Monday. Thanks, guys.
Thank you. Thank you all.
Thanks, Toby.
Bye now.
Thanks, Mike.
Thanks, everybody.
Thanks, everybody.